Thank you for staying tuned. Now, the second half of our show, amid the backdrop of global economic instability or macroeconomic instability and the proliferation of illicit activities in the market, the Nigerian capital market successfully pulled through with the stock market ranked among the best performing in the first half of 2022, despite uncertainties in the Nigerian economy such as political risk, inaccessibility of foreign exchange, challenging operating environment, and other global trends that have resulted in an unprecedented exit of foreign portfolio investors in the capital market. Domestic investors trading activities in the market as of June 2022 recorded a transactions worth of 1.4 trillion naira, while international investors trading activities was pegged at 243.5 billion naira. Well, joining me live in our live studio, like I said earlier, to look at the performance of the market amid burning global economic issues. He is the head of investment research at Anchoria Investments and Securities Limited, Mr. Oise Ajayi. Yeah, good to have you in the studio. I think I got it right this time around.
Of course you did.
Thank you for your time. Let's understand the performance of the market. A lot has actually been playing out. But just tell us, what are the fundamentals driving the market at the moment?
So as it stands, the market is in a place where we're starting to see a moderation in activity. If you look at the top gainers or the top losers, you find that it's mostly small cap stocks who are leading that charge, right? So, I mean, at the start of the year, we saw market activity pick up. We saw a lot of activity on small cap stocks. We saw corporate actions drive market activity as well. And then after a period, we sort of saw a lull in the market where there was no more corporate action, there was no corporate activity. It was just, retail investors and domestic institutional investors doing their thing. And that's where we are right now. So corporate actions drove the market. A few large cap stocks moved, MTN, Airtel, Seplat, and of course as well the dual listing factor which some stocks have on our own markets that enabled or that spurred some level of activity in the market as well, saying as investors found, hey, we could buy in on this market and exit, on the other side on the London Stock Exchange. So these are some of the factors that have, put the market at where it is right now today.
Yeah, but let's look at, I read this through before you came on, and I saw it also online that it seems like the domestic players are now doing so more than the foreign guys that used to play in our market. So I'm looking at, is it the issue of confidence or what is happening? We know we have issues with Forex, and many will say that maybe that is affecting our market. What do you make of that?
Yeah, I think Forex is the number one issue at play, with regards to foreign investors playing in the market.
Yeah.
From 2020, the performance or the performance of foreign investors in the market has been dropping on a month-on-month basis up until now. As of today, or as of July, end of July, the performance of foreign investors was about 29%. And year to date, it had dropped to about 15% compared to about 21 or 25% in the same period last year. Foreign investors do not have confidence in the market. The fact that there are a lot of policies regarding or surrounding FX where repatriation of funds has become questionable. Foreign investors would rather, or they seem to prefer their home economies where they know we can play in this market, we can move our funds around without playing in dangerous waters or risky waters, which is where the Nigerian market falls. And they now have challenges repatriating their funds or moving their funds around. I mean, everyone is trying to avoid the FX risk. We know Nigeria is heavily saddled with a lot of FX demands, for which we're not generating enough FX revenue to meet up with. Exactly. So foreign investors will rather play in their home front or play on their home front where they know they are safe, there's no issue with their funds, and they can move their funds around whenever they want to, unlike here, where there may be a policy tomorrow that says you can't move these funds around, you can't take your funds out of the system, and you're stuck in the Nigerian economy for longer than you probably want to be.
I get that. But let's be specific, maybe some particular stocks now. Of course, we always say the banking stocks are liquid stocks, so everyone is always happy to have them. But let's look at other spaces. Like we also see the insurance sector playing partly well, not too well in the market. But what's your assessment of sectoral performance of the market?
On a sectoral basis, I think you find that the oil and gas sector is really the best performing sector.
Well, still doing so well.
Still doing so well. Year-to-date return for the oil and gas index is about 60%.
Wow.
As of close of business on Friday, So, I mean, oil prices have been extremely high, touched over $100, currently somewhere around about $89, $90 a barrel, you find that many of the companies in the Nigerian space or in that oil and gas space in Nigeria have benefited largely from that oil price increase. If you look at where Seplat is trading at right now, you find that its price is really high, driven by improvements in oil prices, solid fundamentals, talking about their performance, and of course, corporate actions. They talk about the acquisition of another company which has fallen through twice now, but its price is, the news of that, in fact, the combination of the news of all of these activities have spurred activity in that in that space. The banking sector, on the other hand, has suffered, should I say, losses so far in the year, right? You find stocks like GTB, Zenith trading at deep discounts to where they've traded at in the past, somewhere around 20, 21 naira, but the market is still not picking up these stocks. Ordinarily, I mean, like you said, the banking sector is always liquid, right? So everyone knows you could come into this sector, buy, get whatever volume you desire. Whenever you want to exit, there's liquidity for you to exit. And that has still been at play, very much at play. It's just the price is not moving. Investors do not seem to have that level of confidence in those stocks for whatever reason. So it's like fundamentals are good. These companies are declaring, some of the best interim dividends in the market. Dividend yield on the interim dividend is decent enough. Even the final dividends were decent enough, but market reaction has been relatively slow for whatever reason again. On the consumer goods side, you find that companies that have international affiliation have enjoyed a period of uptick in price movements.
Wow.
They enjoyed, for a while, they were some of the preferred stocks in the market. Foreign investors, stocks with foreign affiliation, talking about Nestle, PZ. So investors saw, hey, these stocks, we like them, and they piled up on them because, again, foreign affiliation, and then those stocks surely to a point where they sat, and then, of course, investors did some profit taking, brought down the prices to decent levels where they are right now. But all in all, I mean, the market is still positive, plus 15.58% as of Friday, one of the best performing in the world. Any way you look at it, despite dwindling macro variables,
indeed,
still,
yes. Let me take it from where you stop. Really, the macroeconomic issues, fiscal, monetary issues. We've seen all of that, and not even looking at the elections, which will make some investors sit on the fence. They'll look in, should I come or should I go? Should I put my money in Nigeria or not? But what do you think about this, and how much of an impact is this having on our market, fiscal and monetary policies now?
I wouldn't say the impact has been significant in the market, right? Primarily because, like we've rightly mentioned on these charts, a lot of domestic investors are at play in the Nigerian market, they're taking charge. Right? They've essentially taken charge. And movements in fiscal or monetary policy have sort of had limited impact on the market. We've seen two upticks in the benchmark interest rate from 11.5 now at 14%, and still the markets are still not reacting like they should. I mean, what you ordinarily expect to see is investors will probably expect an uptick in yields in the fixed income space, and then there will be a reallocation of assets from equities to fixed income. Yeah. But the equities market is still yielding very much. Movements in yield in the fixed income market has barely been proportional. Investors are still very much skeptical because real returns are still negative in that space. Inflation is almost 20%. Regardless of whatever fixed income instrument you put your money in, chances are you are not going to outperform or you're not going to get any positive real returns. The equities market, on the other hand, is where you should be able to get those positive real returns if you're able to position early enough. But like I said, the market has sort of entered a period of a lull where prices have sat where they are. Investors don't seem to be picking up the low-price stocks. A few of them are being picked up here and there, but after a period of bargain hunting, you see profit taking. A period of bargain hunting, you see profit taking, and that's why the market is where it is today. At the peak, it was somewhere around 24, 25%, but all of those up and down movements have brought it down to where it is. So impacts of fiscal and monetary policies so far have been very limited. Makes you wonder if both have lost their signaling effect, but I guess we'll see.
Let's move on. Interesting conversation, I must say. But moving to my next question, I was already thinking about that shift of focus that's from the equity space to the fixed income space, because experts and the general outlook like it's bleak. And many say we might even run into recession and all of that. Projections and reprojections are what we're seeing from the likes of World Bank and the IMF. So do you think that it won't be more beneficial? Where do we put our money at the moment?
So like I said, the equities market is really one of the few places you could get any positive real returns.
Long term.
Maybe not necessarily long term. As we speak, there are some companies in the market who are returning who will give you triple-digit returns year to date. As we speak, we're in July.
Wow.
Sorry, we're in August. Some companies have returned triple-digit year to date. But the best question: are these companies you ordinarily put your money in because of fundamentals and your proper analysis, or are these companies you put your money in just because of the bandwagon? Chances are these are companies that you put your money in because you want to join the bandwagon and gain some positive returns while the market is hot, or while the stock is hot, or while that rally is on. But for many of the other stocks you ordinarily want to put your money into, like the banking stocks like you rightly mentioned, many of them are still returning negative year to date. It begs the question, where do we now put this money really? But you really just have to, my advice to anyone would be, get a strategy, stick to your strategy, and hold on to it. Chances that you outperform the market in the long term are much higher than you think. If you look at many of the stocks on the market today, yes, prices are very low now, but if you do analysis of 3 to 5 years, you find that prices are falling to these similar points in the past, and they've risen to various peaks. In the last 5-6 years, I know I've seen GT, Zenith, Stanbic at more than double the prices they're currently trading at. But here we are today trading at deep discounts, and the market is still not picking up all of these stocks. So my advice to you would be, pick up some of these stocks that you think are fundamentally justified. They are on a good path of growth and expansion. If you like dividends, if you like to earn dividends as well, they have a consistent history of making dividend payments. And you find that over time, if you keep an eye on investments, you probably outperform the market.
Oh, very, very good one. Almost finally, I thought you already trashed this, because I was thinking that our market is not so attractive to offshore investors at the moment because of all these challenges we face, and of course the FX crisis. So really, if that is not happening, we rely more on the domestic guys. So what's the outlook? What's the outlook? It's a big one, right?
Analysts are saying the outlook is bleak, right? And I don't think they're exactly wrong, because if you consider the drivers or the drags of the markets, if you want to look at our macro variables, growth is still very much frail. Inflation is almost touching 20%. There's so much volatility in the FX market that no one knows where the exchange rate is going at the parallel market, and barely anyone can get the FX at the bank rates. Interest rate is at 14%, which means to borrow you have to pay a huge premium. Prime lending rate is north of 27%. So to borrow you have to pay a huge premium. So it's like all the macro variables are pointing in a direction of a bleak outlook, and you really cannot take it. You really can't take anything away from it, because again, like you said, we have the election coming up next year.
Yes,
there are a lot of election jitters. No one knows what's going to happen for sure. No one has a crystal ball, right? So everyone is sort of holding back and saying, let's wait and watch, let's wait and see. Even the foreign investors, I want to believe post-election, we'll now see them starting to come back slowly into the market, depending on who wins the election and what direction they are facing in terms of business policy and strategy. Then we might now start to see a slow return of foreign investors. But up until then, the market is in our hands, and we really have to make the best of what we can.
Well, beautiful conversation here. I've been speaking to Oise Ajayi here. I got that right, I guess the name. Yes. That's Head of Investment and Research at Anchoria Investment and Securities. It's the first time on the show. We appreciate this. We hope to have you in, of course, subsequently when we're talking markets. And let's see how the markets performs. We'll definitely always have you in the studio. Thank you so much for your time. I appreciate it.